Hello, traders. Mark P. Markets here. My name is Mark Principato, and I'm a chartered market technician. And thank you for joining me for another exclusive Bitcoin video analysis here for FX Empire. So, in this session, I want to talk about this Bitcoin price action, what this means right now in terms of swing trades and risk, and what we're anticipating over the coming week as far as levels and price structures. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you'd like to know more about greenbridgeinvesting.com and the strategy that we employ for our swing trades, please check out our site. There will be a link to it in the descriptive portion of this analysis. So please check that out. Okay, so let's talk about Bitcoin. What is going on here? First of all, people have been asking me about, bearish trends and stuff like that. And there's nothing bearish about what's going on right now or what's been going on recently. This is a consolidating or range-bound market, okay? In the broader market, the broader structure is clearly bullish because there's nothing but higher lows and higher highs on the bigger picture. So the bias is still generally bullish. Now, with that being said, that gives us some context. In my recent video, if you watched it a week ago, I talked about some scenarios here. I talked about the potential higher low around that 52K area. I talked about the potential double bottom, okay, around the 50K to 48K area. And it looks like Bitcoin tried to go for the higher low. But here's the thing. This price action, it gets to the level and it just doesn't let you in. Okay, at least not for the swing trade. We get this sharp green candle, right? A 4,000 point candle or whatever that is. And what's the low? The low of that candle is 52.9 and the high of that candle is 57.9. I mean, you're looking at about 4,000 points right there. For day trade strategies or smaller time frames, yeah, these candles are great. A lot of opportunity, but you have to keep your risk and your rewards isolated to that smaller time frame. If you try to mix time frames, you're asking for trouble because now you're opening up to much wider risk for smaller rewards. It doesn't work in the long run. Now, as far as swing trades go, because that's the strategy that we employ, right? A swing trade is a trade that goes on for maybe a couple of days to a couple of weeks, and it looks to capitalize on the broader trend. This area, this location around 57K, 58K, this area, it's a no advantage area. It's basically a 50-50 area, meaning it may go higher, it may go lower, and there's like a 50-50 chance of either one. There's no advantage to me taking a trade here. All right. Now, I can argue that, sure, the broader trend is bullish and this thing is likely to test higher, especially since we have a higher low now established. But the thing is, I have to risk 4,000 points or maybe more, maybe slightly more, let's say 4,500 points to justify a one-to-one reward risk if this thing can run to what, 62K or 62.5 or whatever. 62.5 is all the way back up in here in this zone. So it's going to be a lot harder for this thing to go there. And that's just one-to-one, all right, which it's okay, but I really don't feel like taking that type of risk. I prefer to have an entry around the 52K area or maybe 50K area because not only is reward risk more favorable, I don't have to risk 4,000 points in those areas. I can risk maybe 3, maybe 2, but the probability of price bouncing off of one of those areas and going back into the middle of the range gives me a much more attractive reward for the risk that I have to take. So I can risk maybe 2K to make 3K or 4K, and it's reasonable for it to go back into the middle where it is now from such a level. It doesn't have to struggle all the way back to the high because those highs are going to invite a lot of selling activity and you can possibly get a double top. So it's not that, we can't make predictions with these things. It's about what the market, what the probabilities are. That's something you can't see, but you have to anticipate that type of price action. And my point is this, it's easier to bounce from 50K to like 55 or 56K than all the way back to 60. All right, so I'm going to leave you with that. we're going to wait, for the following week. I want to see a pullback again, either 52K or 50K. Otherwise, I'm really not interested in taking any risk in this 50-50 zone. So if you have any questions about that, or if you'd like to know more, check out greenbridgeinvesting.com. You can find me there. And I want to thank you very, very much for watching. I hope you found this helpful. Thank you.